Okay, club. Thanks for joining me on this short video. I cut my lip shaving today, so that's what that black spot is. Yeah, we all have bad days. Anyway, hey, I hope you enjoyed that previous lesson. That's one of my favorite lessons. I hope everything's coming together for you. Now, here, you guys know by now I can be very brash. I tell it as it is. So here's the story. This is a very short little video, a little introduction to how to garner 8%, 10%, 12% returns on your money safely. And here's the deal. If you don't see the bigger picture after this short video, after this lesson, I want you to immediately email me, call me, do whatever you have to do to request for your money back. Because if you don't see the bigger picture after this video, if you don't know why your investment into this portion of the club was worth every penny by now, then basically you're brain dead. You're a know-it-all. You think you have all the answers. You don't think outside the box. You don't use common sense, and you're a herd dweller. You like to travel in the pack. Okay. Basically, I'm trying to create a different pack, a pack of like-minded individuals that see the bigger picture. So I hate to be hard like that, but I don't want you in my club if you don't see what I'm about to share with you. If you don't get excited, not just see, if you don't get excited and embrace what I'm trying to achieve here, after the end of this video, then I want you to get your money back. I don't want your money. I don't want to talk to you. None of us want you involved. That being said, for those of you that do get excited by the end of this video, it gets better. Now, you guys have to understand that once we get past the 12th lesson, you are going to be asked to join the investment club. It's a big club that will have little tiny clubs within it, and you will be asked to pay a monthly fee. And if you're understanding what's going on here, you will be more than happy to pay that monthly fee, which, by the way, is tax deductible, and it's not going to be some huge monthly fee. Every one of you can afford it. You're spending more than frickin' on Starbucks, but this fee will make you money. So let's get started with this. Now, this is just a preview. I'm not going into great detail on it. I'm just getting your heart pumping. And this is just one investment opportunity that can pay you 8, 10, 12% returns safely. So let's talk about hard money loans. So what are hard money loans? Well, basically, in the sense we're going to be talking about them, they're real estate loans made that do not fall into the traditional conventional parameters. Look, you're still going to do a loan application. You're still going to get appraisals, title work. Everything is the same. But you use common sense underwriting, and you make the decision. So these loans are typically for credit challenged borrowers. These are people, just because you have bad credit doesn't mean you don't make good money or have a lot of money. There are a lot of millionaires out there with poor credit. In fact, a lot of millionaires have filed bankruptcy before. You'll find that most of them have, because we all learn from our lessons. So just because you have poor credit doesn't make you a bad person, folks. It just means that the system, the credit reported system, marks you as not creditworthy. You don't pay your bills. That's fine. It may be for income challenged borrowers. Just because you don't make income, folks, doesn't mean you can't make payments. Think about it. I talked to you about you could actually rent and still own a rental property. Well, as long as someone else is making your payments for you, who cares? Now, I understand you could have vacancy. They may not pay. I understand that. But just because you don't have income doesn't mean you can't make payments. Also, a lot of people that are self-employed will go to a bank and get turned down for a traditional loan because we write everything off. It makes our income, our adjusted gross income, look much lower. Remember, we taught you that in the tax lesson. Your adjusted gross income, which never made sense to me, why banks punish the self-employed for people that take tax deductions like me and you. But if you have a job, they'll count all your income. And think about it. Look, if you're self-employed, you're the last person going to get fired. And you know when you're going to get fired because you're the one that does the firing. If you're employed for someone else, you never know when your last day is. So it never made sense to me. So these loans are for income challenged borrowers. It's also for fast turnaround loans. People that want to fix and flip or something like that. They need a closing tomorrow. They found a great deal. This guy's going into foreclosure tomorrow or in 4 days. I can get this thing for a steal, but I have to close in 3 days. Hard money loans. They're great for real estate investors because there's no hoops to jump through. It's quick money. And you can do it for both commercial and residential properties. Here's a typical structure. Again, I'm giving you the bird's eye view. I know I've done a lot of hard money loans. In fact, I told you I've been sued before. I got sued for a hard money loan I did. Okay, and I won. But it doesn't matter. Getting sued sucks no matter how you slice it. But anyway, a typical structure is simple. It's very short term. It can be anywhere from 3 months to 5 years. You're the lender. You make that rule. You would typically do interest only. You don't amortize the loan. You'll typically do a balloon payment. In other words, it's 2-year loan with it's a interest only loan with a 2-year balloon. It has to be paid in full within 2 years. You're going to charge a higher interest rate because it's a higher risk loan. You're going to charge points to increase your APR, your annualized percentage return. You're going to charge origination points. You may want to give the origination points to the person that brings you the loan, unless you find it yourself. In fact, you always give the origination points to the person that brings you the loan. They deserve to get paid. You're going to do very low loan to value. What loan to value means is simply, if a house is worth $100,000 and there's a loan of $50,000 on it, there's a 50% loan to value. Okay? If there's a $65,000 loan on a $100,000 loan, there's a 65% loan to value. So you're going to do very low loan to value. You're going to make the borrower get hazard insurance, and they're going to make you the loss payee. So if the place burns down or whatever the case is, your loan gets paid off first. And you just make common sense decisions. And here's what it boils down to. If all hell goes in the handbasket, do you want the property? If your answer is yes, you make the loan. You can also cross-collateralize and do all kinds of fancy stuff to make your position safer than you can imagine. But again, this is the bird's eye view. We'll have a whole lesson on this once you become a member of the investment club. So let's just look at a case study scenario. Let's say a real estate fix and flip investor, and I put investors in quotes because I've told you that fix and flipping properties is not investments, that's a job. But we'll call this guy an investor because he likes to think of himself as an investor. And he comes to you and needs to close very quickly. He found one of these great deals. You have the home appraised from your appraiser, and your appraiser, whom you trust, gives you two values. An as-is value of $165,000 or a fixed-up value of $200,000. Meaning this property we're probably selling 3 to 4 months for $200,000 if these repairs were made, or it'll probably sell in 3 to 4 months if no repairs are made for $165,000. Now the flipper that comes to you to borrow the money intends to put about $30,000 of work into it and flip it for about $185,000. So he can get the property for $125,000. Okay. So he's going to be into it 155, sell for 185. So he's planning on making $30,000 in a few months. After you review your appraisal and possibly going out and self-inspecting it yourself, you decide you like the loan and you tell your flipper you will gladly loan 65% loan to value of the as-is value, or $107,250. So the flipper's going to have to come up with a little money. Okay. And you're going to do a 1-year interest only at 12% with a balloon in 1 year. No prepayment penalty. You're going to charge 2 points and 2 origination. And you're going to add the points to the loan, so your total loan amount that you're going to loan to this guy is $111,540, or a total loan to value of 67.6%. Again, don't worry if you're not following me here. Just see the bigger picture. So you charge the borrower for title work. You want to make sure you get clean title. Closing fees, appraisal, prepaid insurance with you as the loss payee. You close on the loan and you fund $107,250. Now remember, the borrower borrowed $111,540 because you wrapped in those points. And he came to the table with the other closing costs. You fund $107,250. So your monthly payment to you is $1,115.40 that the flipper has to make. And again, there's all kinds of things you can do. You can bury the payments if there's enough loan to value. At the end, he doesn't even have to make payments if you like the loan, and you just add them to the loan as you. I mean, there's so many. That's the beauty. You can do anything you want. But your APR is 12.48%, because remember, you're getting payments based on the total loan amount with the points in it. Even though you only charge 12% on the note, you're really at 12.48%. Now, what's the worst case scenario? I love asking this question. And everybody always tells me, well, he doesn't make his payments. Wrong. I got news for you. The best case scenario is if he or she doesn't make his payments. Surprise. You don't want the flipper to make the payments. Let me explain. The worst case scenario is he or she makes the payments. And he sells the property and pays you back in 1 year the $111,540 because you loaned him that amount even though you only funded $107,250. So you collected $13,384.80 in payments over that 1 year. You collected $4,000 in points. So your APR, folks, is 16.2%. Now you tell me a 401k or an IRA doing that. That's how the big boys get wealthy. Okay? That's worst case scenario. Let's look at best case scenario. He or she doesn't make the payments. So let's say you're 6 months into this, or it takes you 6 months to foreclose. You have to foreclose. He may threaten bankruptcy, all kinds of crap. Don't worry about that. Okay, probably not, because I'll show you how to avoid all that. So now you have this property. Well, you know you can sell it in 3 to 4 months for $165,000 as it is, because that's what your appraiser told you, or you have a gut feeling. I mean, everything doesn't work out. So you decide to sell for $150,000 as is, and you just sell it to a regular old buyer. So you profit $42,700. If you divide $42,700 by your out-of-pocket expense, your $107,250 that you loaned originally, that's just under a 40% return on your money. But you can't call it an APR because this is not an annualized. Remember, you did this in 6 months. When we talk interest rates, we're always annualizing them. So if you did it 40%, if you earn 40% in 6 months, that's an annualized return on your money of 80%. But it's still $42,700 in profit. And all this talk about percentages or rates of return that we've talked about, remember I told you it's irrelevant. All that matters is that number. The dollars going into your pocket. Now you're going to have some foreclosure fees and some time, so maybe it comes out to be only 35%. Can you live with that? What? Wait a minute. You say you don't have $180,000? You can't run out and do this? Or all your money's tied up in a 401k? Well, maybe you ought to go back to lesson 2 and figure out how to get your money out of your 401k plan or whatever the case may be. Maybe you ought to start paying attention to all these videos. But it doesn't matter. I guess you might as well start promoting this club harder if you don't have $108,000. Or maybe you have $108,000 but you don't want to take on all the risk. You like to spread your money out. Then I'll say it again. I guess you guys should go out and promote this club harder. See, all you have to do is form a real estate investment trust or an investment club with other members of Today You Start. My big picture. And you make the shares of this club cost $1,000. Now, most of you can come up with $1,000. I've showed you how. If you can't now, you will soon. Okay? So in this case, you're going to form this LLC or a trust to do this one loan at $108,000 or 111, whatever it is. So you have 108 shares. Now you can buy as many shares as you want. Maybe you want to put $10,000 into this deal. So you buy 10 shares. Maybe one of you wants to buy just one share, can only afford one share, so you buy one share. But everybody is on an equal playing field now because you belong to this club. So if you have $1,000 invested in this deal, or you have $10,000 or $50,000, you still get the same rate of return. Now, obviously, the person with $10,000 in this deal has more risk, but that was their choice. They wanted to earn the higher return on their $10,000. You understand? It's a win-win-win situation. Do you understand what's going on here? Now do you finally see the big picture? And this is just for hard money loans. It works the same for other safe investments as well, as you're going to learn once you move forward with me past the 12th lesson. By the way, maybe, just maybe, we have another club that likes to buy real estate at wholesale and hold it. Not flip it, hold it to rent it out long term. So let's say in our scenario here, your borrower doesn't pay, so you foreclose, and in most cases, you can get your borrower to walk away. Give them a couple $1,000s. Say, look, we won't report this to credit. We won't do anything. Here's $2,000. Let's do it in lieu of foreclosure. Just sign the property over to us. 9.5 times out of 10, that's exactly what they'll do if they're smart. Because then they'll live to see another day, and you may actually loan this person money again. The only reason they wouldn't make the payments is because they came across something they didn't foresee, or some hard times. So you might actually, because they did this with you, you might loan them money again. So getting people out of that property fairly quickly is not hard. Now, so all you do is you flip it to another TYS club. Let's say, call it the buy and hold club. So it takes you 24 hours. They buy it from you for $125,000. They know they're getting a good deal because they saw the appraisal. $165,000 as is. Okay, $200 if it's fixed up. So your club profits $17,750 for a 16.5% return. But remember, you could have done this in 1 month. That could annualize out to 160% returns. Let's say they fix it up and rent it out for $1,100 per month. Okay, or $13,200 a year for a 10.56% return. If they put some money in to fix it up, that may drop to 8 or 9%. But why would you do it? Why would you want to be in the buy and hold club? Because that club gets the advantages of taxes and long-term appreciation and monthly cash flow. And you'd sell shares for this club just like any other club. You know how we did it before? $1,000 a share. Are you seeing the possibilities here? You could literally have your money in both clubs. You know, they say don't have all your eggs in one basket, but we haven't even talked about all these other investments I'm going to bring to you. This is the grand vision. And as I said, if you guys don't see it by now, you need to get your money back and go forward. Be one of the 96%. Be one of the 96% of Americans that are going to be relying on the government, family, or friends when they retire. So what else do I have to do? You, not just me, you and I both want a big club. I want a big club because I want membership dues. And I enjoy educating. You can bet I'll be participating in some of these clubs. But on top of that, I'm willing to share those membership dues with you by paying you. If you refer people, I'm paying you a portion of those membership dues. So when you get to the point where you're paying monthly membership dues, if you have 3 people you refer to the club, you're not going to have membership dues because you're getting paid more than you're paying. And it's a real business. See, and I'm willing to educate and introduce you to the right resources and contacts. See, it only takes 3 things to be wealthy: knowledge, resources, and contacts. And I'm trying to provide you all 3. I'm even willing to pay for your marketing. If you haven't seen that video, there's a tab above that says On Me. Click on that and I'll show you what I mean. It takes you 5 minutes and I'll pay for the darn marketing. And you get the credit. You get the sign-up fees. Anyway, I hope you're excited. I hope this lesson and this addendum to this lesson was worth every penny. See, I know I've taught you something. You may sit there and say, oh, I know all this. I know. If you know all this, then why aren't you wealthy? Maybe you know it, you just don't think it's practical, or you just don't want to put it into practice. So, well, have I said anything in all these lessons that doesn't make sense to your core level? I mean, I'm the first one that's actually sharing things with you no one else does it. How your federal income taxes, and maybe you don't want a Roth IRA because you're going to pay less in taxes, so on and so forth. All right, that was my rant. I just don't understand why, if you're sitting there and why you're not just jumping off of the walls and going out and telling all your friends, family, friends, neighbors, co-workers, you got to check out this club, this thing. This is it, and get paid doing so. So make sure you check out the My Biz section, the My Biz toolbox, because you're going to want to make sure you use your link so you can get credit. I'm not the amazing Kreskin for you young people. He used to be a mentalist on TV. I don't know if people who you referred unless they use your special link and all that. And I teach you all about that. So anyway, guys, that was exciting. Don't you love this? I've made a fortune with hard money loans. Fortune. All right. We'll see you in about 5 days. Be well out there. Be safe. Take care of one another. Bye-bye.